Good afternoon, everyone. Thank you so much for joining us. Welcome to our webinar, Cash Flow Rules Everything Around Me, but it doesn't have to. Go from manual and complex to push-button ease with FCCS. And this is our first webinar in a multi-part series about Oracle FCCS. So we hope you'll join us for the next part of our series as well. And we're looking forward to walking through and expanding on how FCCS is designed to help rapid deployment of cash flow statements out of the box with you today. And we'll have more on that from our presenters. And with that, I'm happy to introduce Andrew Fahey and Will Stewis, who will be presenting today. Andrew Fahey is one of our senior solution leads here at Platform Specialist. Leveraging his industry expertise and technical acumen, Andrew has led large-scale projects for global organizations across consolidations, forecasting and planning, data integration, and analytics functions at Platform. On top of that, despite his fantasy team being riddled with injuries, Andrew will likely still make the playoffs, so you know he's a champ. Will Stewis is a CPA with experience at both EY and KPMG, who can dive deep into the nuts and bolts of how companies report financial data. If you're looking to talk debits and credits, technology, or even Seinfeld, look no further than Will. And I'm Molly Mackler, our Director of Client Success at Platform. I'm here to be your point of contact for any and all things related to our resources and expertise. I'm admittedly a Duke fan, as well as a fan of all New England sports teams, so I'm calling Sox in 5 on this series. Go Sox. We're glad to have some of our clients joining us today. Thank you so much for joining, and excited to welcome the new names and faces to the webinar as well. I'd like to briefly introduce our firm to all of the new faces and refresh our clients on our current offerings. Platform Specialists in a nutshell. We pride ourselves on being a group of straight shooters who serve our clients first. We partner with the leading EPM technologies in the space, and today we'll be focusing on Oracle FCCS. Our goal is to tailor the best fit of our services, solutions, and technologies for your business needs. A key differentiator that we bring to the table is that each of our consultants thoroughly understand both the technical and functional components of the business challenges that our clients face. And that really gives our firm the ability to take a holistic approach to serving our clients efficiently and effectively. We've implemented hundreds of solutions within the EPM space, and we're based on the East Coast, although we do serve clients across the US and even internationally. Platform Specialists has supported clients across virtually all major industries, and we're able to speak your language in order to help solve industry-specific business problems. We'll be focusing on cash flow and FCCS today, but we also help clients with financial budgeting, planning, consolidation and close, reporting, and business analysis, as well as systems integration. Okay, enough about us. I'll pass it over to Andrew to get us started, but first, let's see who's still with us with a quick poll. All right, the votes are coming in. Looks like a lot of folks are running their cash flow statements in Excel today. A couple are still using the Abacus, so hopefully this is a great session for you. Good spread across the board. All right. Pass it over to Andrew. Take us.
All right, thanks for that, Molly. Can everyone see my screen here, just to confirm? Can you see Molly?
Can see it.
All right.
All good.
So today we're going to be covering Oracle's Financial Consolidations and Close Cloud, or FCCS. And what this tool is a web-based solution for consolidations and reporting. And one nice feature is that in addition to consolidations, it comes with tools like Close Manager and Supplemental Data Manager to actually help better manage that full monthly close process. But one thing that this tool is not is a cloud version of Oracle's HFM. This was created as an entirely new product, which, unlike HFM, has significant out-of-the-box functionality that actually allows companies to get up and running with less customization and scripting in favor of configuration of their pre-built modules and logic. So If you think about it, some of the common items that were built custom in HFM, like FX and CTA impact, non-standard ownership calculations, currency overrides, and the topic of this webinar, cash flow, these now happen mostly out of the box or through configuration of their existing rules. One note I'm going to pause here with is that the much anticipated release of extended dimensionality for FCCS is now here. So where the tool previously was limited to 2 custom dimensions, clients can now request a patch from Oracle and now allow up to 4 custom dimensions. And although some clients might say that they still need more custom dimensions than that, I will make a note that certain dimensions that used to occupy a custom dimension in HFM, like data source, now come out of the box as standard dimensions. Additionally, FCCS comes with a movements dimension, which we're going to be focusing heavily on in this webinar, which helps facilitate that cash flow reporting. So speaking of, let's move on to the topic of the day, which is cash flow and FCCS. Over the next 20 minutes or so, we are going to show you how you can use FCCS to take your cash flow from custom and complex to out of the box with the ability to easily trace where each of those numbers came from. So to set the stage, let's think about the day in the life of a corporate finance user during the monthly close whose company has a system-based cash flow solution. You're reviewing the cash flow on day 4 of close, and you notice something doesn't quite look right on one of the lines. So you start to dig into the data, but you can't easily figure out what made up that particular number. So you do what you always do. You walk over to that person on the finance team that has somehow been designated as the system guru, despite that not being part of their job, because they always seem to be able to figure things out. After talking with them for 30 minutes and getting nowhere, you decide to raise the issue with your system administrator. 6 emails, 2 conversations, and 2 hours later, you both are on the same page that the number doesn't look quite right. So the admin gets to work reviewing the various user-defined fields, the business rules, the scripting, memberless files, and on and on and on to figure out how that number got there. Countless hours later, you finally identify all the data points that went into that number and find the issue and get it fixed. And if this sounds familiar, let's take a look at how we can improve this runaround with FCCS. So I'm going to take this moment to switch over to the tool. Okay, so this is going to take me to the landing page where I can see this, which is called the navigation flow, which is this arrangement of various tiles. So this home screen can be customized and tailored to different users so they only see the tiles and items that are relevant to them. And really the whole goal here is to focus on the process of the monthly close rather than the technical steps by guiding users through what they actually need to do. So at this point, I'm going to turn it over to Will, who is the head of the local T Accounts fan club, to dive into cash flow and the movements dimension.
Thanks, Andrew, and hello, everyone. For this part of the session, we are going to take you into the system to walk you through where the magic happens, the movement dimension. It is important to note that the view we will see is not the view an end user would typically see, but it's really a good way to show you how things actually work in the system. So as Andrew had mentioned, after you log into FCCS and you're on the landing page, we'll go to Navigate and click on Dimensions. Once this opens, you can navigate to the Movements dimension by selecting the drop-down in the center of the page. The Movements dimension is a system-created dimension that comes preceded with members to help facilitate the cash flow process. These preceded members can easily be identified with the FCCS _ prefix. These members cannot be deleted, but users do have the ability to edit the aliases as they see fit. We will show you that along with some other items later on in this session. Now, the movement dimension in FCCS is used for tracking and analyzing changes in accounts from period to period. Many companies might refer to this as roll forwards. In addition, this movement dimension provides out-of-the-box cash flow reporting. So as you can see on the screen here, the movement dimension is made up of 4 hierarchies. We have movements, closing balance variance, cash flow, and cash change. We will touch on all 4, but our main focus will be on the movement and cash flow hierarchies. We'll start with movements. So if we drill down, this hierarchy houses the closing balance, which is simply the sum of the opening balance plus periodic movements of each balance sheet and income statement account. To begin, let's look at the opening balance. This number is calculated automatically by the system when a consolidation is run. More on how this calculation works and flows is a topic for another webinar session, but at a very high level, the opening balance is always the closing balance from the prior period. There's also a member here that is available to make adjustments to the opening balance if needed. Next, let's move to the movements subtotal section. If we drill down here, you will notice that out of the box, this section is grouped similarly to the cash flow statement classifications. We have operating, investing, and financing. If I drill down to the base level under the operating section, we will see all the different movements. And you'll notice a movement FCCS _movements _ accounts receivable. This should represent the movements attributed to all account receivable balance sheet accounts for the specified period. This next part is really the key to how the movement dimension works. Whether you are using data management or manual inputs to get data into the system, the general approach is to map each of the balance sheet accounts to one movement member as a default. Now, all financial data, which is both income statement and balance sheet data, should be loaded to the base members of the applicable movement member. Some general rules are all cash and cash equivalent accounts are mapped to the FCCS movements cash member. All P&L accounts are mapped to the FCCS movements net income member. And all balance sheet accounts are mapped to their applicable base level members. Now that we have all of our movements defined for the full balance sheet and income statement, let's see how that helps drive the cash flow statement. Now, before we get into the system, one major difference for cash flow reporting in FCCS in relation to most system-based cash flow solutions that many of you on this call may be familiar with is where the cash flow statement sits. Instead of being another hierarchy within the account dimension, the cash flow statement also sits within this movements dimension. This provides some pretty powerful advantages, which we will get into later. Now, with the cash flow statement being a separate hierarchy, as we just mentioned, this allows the hierarchy to be built by sharing members from the movement dimension. So if we drill down into the cash flow hierarchy, and specifically in the operating section, you will see the FCCS cash flow accounts receivable line item. If we drill down there, we have a shared instance of the accounts receivable movements member that we saw earlier. So to really drive this home, let's take a look at a really simple example. Looking here at an accounts receivable, it has an opening balance in the movement dimension of $11,000. As this is January, this beginning balance is simply a roll forward from December of the previous year. There is also a $1,000 movement, which is mapped to changes in accounts receivable movement member. This movement then flows to the cash flow from accounts receivable cash flow line with the sign flipping to accurately capture this movement's impact on cash for the period. The net result is a negative $1,000 movement on cash. So now some of you may be wondering if additional movements can be added, and the answer is yes. So let's dive in and see how movements can be added and the best practice for adding these new members. You can see here that we already created a custom movement member called Movements Other Liabilities, which we can tell is custom since it does not have the FCCS _ prefix. But to go through an example of adding a new movement, once you are at the lowest level, click on the parent member where the movement should sit. So in our instance, we want it to sit under changes in net assets. We will then click the Add Child button, and you will now be prompted to create the custom member. Best practice is to create a member name where only the FCCS _ prefix is dropped. In our example, we will create a prepaid expenses movement member, which will have the name Movements _ prepaid expenses. So after adding the name, the only other property that should be adjusted is the alias. So we can type in the alias as changes in prepaid expenses. All other properties should remain untouched and retain the properties of the parent member. So if you remember from earlier, only the alias for preceded movement members can be altered. Since this is not a preceded member, we're able to change things such as data storage, plan type, data type, etc. But if this was a preceded member and you went to edit, all those property fields would be grayed out. So once we've created this, we'll hit save. And after the new movement member is created, you must now map that movement member to the cash flow statement by adding it as a shared instance. At this point, you have two options. One is to create a new cash flow line item for that movement member, or two is to add it to an already existing cash flow line item. For the movement other liability member we added earlier, you can see that we've created a new cash flow line item named cash flow other liabilities. This newly created cash flow line has a shared instance of the movement member we saw above, which is denoted with the shared in parentheses. For our prepaid expenses example, we do not need a specific cash flow line item, as this was just needed for movement analysis and disclosures rather than to actually impact the lines of the cash flow. In this example, we will add a shared instance of the prepaid expenses movement member to the pre-built FCCS underscore cash flow underscore other current assets line. So again, to do this, we'll click on the parent member and hit add child. Here we will need to add the movement member we just created. It is very important that the name is the same as the movement member you created earlier. So again, if you remember back to that, we've created this movement prepaid expenses. We'll type in the name. Then we'll change the data storage to shared. Once the data storage field is set to shared, the alias and other properties will be retained from that movement member. The final step is to make sure that the aggregation property is properly selected. In our example, we will set the aggregation property to subtraction because a decrease in an asset represents an increase in cash and vice versa. So once that's complete, we'll hit save. And you can see here that under the other current assets line, the new movement that we created has been added. So now we've discussed both the movement and the cash flow hierarchy. There are two remaining hierarchies in the movement dimension. The first is closing balance variance, which is a check to make sure that the closing balance in the movement hierarchy ties to the closing balance input by the user. And the second is the cash change hierarchy, which calculates the change in cash as the opening balance plus or minus any movements plus any FX adjustments. And with that, I'll turn it back to Andrew.
All right, appreciate that, Will. So now looking at this dimension and how it's used to drive the cash flow, hopefully some of the benefits of this approach really start to jump out for you. Using this methodology, the cash flow really becomes much more of a mapping and a metadata exercise rather than something that's driven by custom rules. So thinking through that, let's say you need multiple views of your cash flow statement, one for internal reporting and one for external reporting. This really can be easily facilitated by creating a second cash flow statement and regrouping those movements to present a different walk to the change in cash. What this approach really does is it gives the power and the visibility back to the end users to better understand exactly what went into any given cash flow line, and you'll start to see that now. So far, we've really been talking mostly in the theoretical related to the hierarchies and metadata. So I'm sure at this point, everyone's thinking, okay, that's great. So what does it look like in action? So let's take a look. So I'm going to click this Oracle on the top panel to bring me back to the home page. And then I'm going to click on data, which contains all of the forms in the application. So much as it is the case with the preceded logic and hierarchies, FCCS also comes with some out-of-the-box forms to help view and review the data. If I go into the cash flow folder, I can see the preceded forms here, again indicated by the FCCS underscore prefix, but I have also built this cash flow review form which is something that we created. And this is really a sample form that consolidations users might look at during the close to help view and diagnose issues with the cash flow. We can see that in my point of view of the top, I have the ability to change my year, my view, which is either year to date or periodic, as well as my entity. Also notice here that I have enabled this cool option that actually displays the currency of the entity right here in the menu. So you can see that we're looking at New York, which is a USD entity. If I wanted to, I could click this pencil off here to the side, and I can easily toggle my entity between New York, New Jersey, Pennsylvania, or even the total at North America. But for this demo, we're going to focus on local currency data without introducing FX, which we can cover in subsequent sessions. Right, so I'm going to hit cancel. So looking to the grid, in the first column is my movement dimension. I start with the opening balance of cash, and then I show the net cash impact from my operating, investing, and financing to get to my total cash flow, which then adding with the opening balance gets me to my closing balance for cash. The second column is where you're really going to start to see the power of this approach, because this is our account dimension. At this point, we have it set to the top of the balance sheet, and we'll get to that a little bit more in a moment. Finally, you can see that we're showing here at year total, which is the full year cash flow, but I can actually click on this and drill in to see my quarters, and even one level further, I can drill in down to see my months. You might notice from before that we're viewing this cash flow right now on a year-to-date basis. So when I'm looking at February, for example, this is representing the year-to-date cash flow up until that point in time. But another really great benefit of FCCS is the ability to easily switch this year-to-date view to a periodic view. Okay, and what I can do here is if I click the pencil again, I can easily toggle to periodic and hit apply. Okay, and now what I'm seeing here is this is a periodic view of my cash flow. So this is an individual month's cash flow. This is something that if anyone has experience with, is something that usually requires a lot of additional customization with most system-based cash flow solutions, but again, requires no additional work with FCCS. So I'm going to collapse this year total again. Okay, so now let's put you back into the shoes of that consolidations person from the beginning of the story in the intro. You got a question from the controller, but exactly what's going into the cash flow from AR line. What I can do is I can start by drilling into my net cash flow from operations here. Okay, through net adjustment to net assets. And here I can see my cash flow from accounts receivable line, and it's showing a value of negative $383,000 as my cash flow impact. But what I can actually do here is I can drill in one level further, and I can actually see that this is, being made up of that changes in accounts receivable. So hopefully this kind of bridges the gap based on what Will was saying, how the movements are actually shared into the cash flow structure. So here I can see that I have a $383,000 movement in my accounts receivable, but when it comes into the cash flow, it accurately reflects that increase in accounts receivable as a decrease in cash in the cash flow statement. But let's actually take this even one step further. If I now isolate this movement line and I come over to my second column, what I can start to do is drill in on my balance sheet, and I keep going through my total assets, current assets, all the way through to accounts receivable and other accounts receivable. What we have here now, I was able to go from my cash flow from accounts receivable down to the exact individual accounts that made that up. No need to bug your coworker, no need to reach out to the admin. You can readily see exactly what's impacting any given line on the cash flow. So now that you've figured out what's going on in that cash flow line, you correct any of the issues, it's time to report. While this form is really great for a review, we're going to leverage the built-in report builder to generate a nice, pretty cash flow statement. So first, I'm going to hit close out of this form, and I'm going to select the reports tile from up on the top. Down here, we can see that I've built a cash flow statement. Off to the right, I can see that I can either open it in my web browser, in HTML, I can open it in a PDF, or I can even open it in Excel. I'm going to click on my cash flow statement and I'll open it in HTML view. And the first thing that I'm going to get is a few prompts. What this is asking me for is how do I want to view it? I'm going to stick with a year-to-date view. And what year are we reviewing? 2018. So I can hit OK. All right, and here we go. So this is going to look similar in format to the form that we looked at. But as you can see, it's nicely formatted. It has headers and it has footers, including down here, I have some footers that say who ran this report and when they ran it. So in the rows, again, you can see that we have our movements dimension where we're walking from our opening balance in cash to our cash flow statement and all the way down to our closing balance in cash. A little bit different to the form, the accounts dimension is now in the columns, but I still have that ability to drill in. And what this really gives you is this really, really useful view of your cash flow statement where I can drill into the different sections of my balance sheet and see exactly what areas of my balance sheet are impacting each and every line of the cash flow. And this is really powerful and it allows the end users a lot more visibility to the makeup of what went into the cash flow statement, figuring out issues, going back to the correct places where they need to make adjustments. Okay, so now that you're happy with the results of your cash flow after reviewing a report, we can PDF it and send it over to your boss who's been peppering you with questions all week. So without all that runaround trying to figure out what went into your cash flow, you might just manage to finish your day in time to catch happy hour. And everybody loves happy hour. So at this point, this concludes our demo in FCCS, but remember to tune into some of our future installments where we're going to expand on this topic a little bit more. And at this point, I will turn it back over to Molly. Might be on mute, Molly.
Yep, you got it. All right, thank you so much, Andrew. And thank you so much, everyone, for attending the webinar. We sincerely apologize for the technical difficulties that we experienced, and we will be sending out a clean recording of the webinar to each of you following the session. And you'll be receiving a note from me after the session to schedule your own demo of FCCS and to give everyone an opportunity to have any questions that they may have answered individually. We appreciate you taking the time to join our webinar, and like Andrew said, look forward to having you join us for the next part of the series where we will not have any technical difficulties. Thank you so much and have a great rest of your week.